The global cycle, something that investors and traders like you and I need to talk about, is starting to heat up. And with US elections almost upon us, we need to discuss where we are right now. In today's video, we'll cover that together along with the two levels that got hit on Friday and why they were so important for the market. Our first bull level, an absolute tick, and then it managed to close above the options. So what's in store this week according to Wall Street's biggest players? Well, today we talk about rotation, the bonds market starting to get a little scared, and of course, one of the hottest stocks in the world right now, Nvidia, facing the dreaded island reversal. Will it gap lower? Let's get through stocks, commodities, and cryptos for the week ahead. Join us, guys. This will be a good one. Well, welcome back, everybody, to the special weekend edition of The Daily Show. My name's Tom. Let's get into the macro, the data, the lead indicators, and the hottest charts, and why they're going to matter to each and every one of us over the next coming months. If it's your first time here and you've ever been left asking yourself the question, why are markets doing this? Then remember, subscribe and smash that bell icon, as we like to bring simplicity to the complicated together. So one of the things I first posted over on X this weekend was that Chicago PMI report. And I think it's very important that we look at this in a different light, because if you're aware, it has a 100% track record of showing recession. So is it usually early? Is it late? Well, generally speaking, it's pretty much a delayed indicator. And you can see that here on the chart. As we cross below 36 for the first time, we've generally already been at really kind of either recessions or already moving heavily down. This is the first time we've ever only seen 1% away from the all-time high and getting a read like this. So why does it become important? Because generally speaking, it's actually not a bearish read. In fact, it's a very bullish read. And you can see here, Nautilus over on X broke this one down and showed that generally it is very bullish for markets. And 1 year later, we are sometimes, or a lot of the time, in double-digit gains. Now, as we mentioned before, this is the first time it's ever happened at 1% off the highs. I think the other time that was kind of bullish was 8% off the highs. And we have had periods of time where markets have actually rallied very nicely after a read like this. So why do I bring it up? Well, it's always important to look at both sides. If you look at it just from a 100% recession indicator, it's going to freak you out. If you look at it from every single time we've ever seen it, we're pretty much bullish, then you might say, well, okay, maybe I can neutralize that particular indicator, or at least look at it from maybe a more bullish side. So let's talk about the market from an investor's standpoint. Where are we? Why is it important to do this? And of course, should we be concerned? Well, as it turns out, Jury and Timmer over on X has posted this really cool chart, and it shows you here secular bull markets over time. Now, you're probably aware of the Roaring 20s. That's this one here, and you can see that the acceleration in terms of where it was moving compared to the normality of more the 40s into the 60s and the 1982 to 2000 run, it was totally different. The rally was absolutely extreme, and it blew up way faster. Basically, it was a super bubble that went really quickly. Now, generally speaking, bubbles, or at least bullish markets, tend to last a very long time, and you could argue we've been going since 2009. So if you want to bring that argument into it, where are we? Well, we're probably around the 7th innings. So basically, we're getting closer to the end, and we're getting to a point where we start to have to question so much about the markets. What sectors do we want to be in? Where do we want to actually rotate to? And more importantly, should we really be concerned about the market? Well, this is an interesting breakdown, because when we compare it to some of these other super bull cycles, you can see that the market is not at terrifying levels just yet. Now, why is this? Well, the answer is actually because of buybacks. So if you're familiar with the buybacks that are going on in the markets right now, there is a lot of them, or there are a lot of them overall. And basically, almost every major company you could think of is doing a buyback. And what that's doing is that's improving the payout ratio in terms of how we're looking at markets right now. You're getting a bit better return on your money. So because of that, you can see here, we're sitting at around a 35. Now, during the 20s, the Roaring 20s, where did we get to? A 50. During the end of the period over here, which was the 49 to 68 period, we got to 40, which of course was interesting because we got that in 2021 near the end as well before we fell off. And during the super.com bubble, we hit 74. So the question is, could we go higher? The answer is absolutely yes. Are we near the end? Maybe not, because of course we probably will be reading a 40 to 45 in the future, and somewhere around there you've got to be concerned. And of course you bring in the last kind of question here, and that is how much leverage is in the market. And at the moment, I can tell you, because I tracked this a little bit, that the leverage is not near some of these other levels when you consider the amount of cash that's actually available in the markets or the general kind of economy as a whole. So why does this also become important? Well, it gives us a bit of an idea on what we can expect in the future when it comes to returns. Is it a great time to be buying the markets right now? Well, as we mentioned, we're sitting around a 35, and that sits around this area here, which suggests that our returns could be not so good, maybe 7%. Now, what happens if this number starts to go up? Well, of course, it gets down to very scary territory, and those high valuations tend to lead into way negative returns in the future. And that, along with, of course, US inverted yield curves and everything else, will be a concern for us as investors and traders. So is this something we should watch? Absolutely. And should we be following it? Yes, we will. And of course, we'll be doing that on this channel. So the then question becomes stagflation, because of course, when you're always in these investment scenarios, are we changing the type of, let's say, economy that we're in or the economic situation that we're in? Well, you'll notice here that Goldman Sachs has a very interesting read on what they expect the GDP in the US to do. And you may be again aware of the news that's just come out, which obviously shows the GDP shrinking in Q1. Now, was that expected? Well, according to Goldman Sachs here and Mike Zaccardi over on Twitter or X's account, you can see that Goldman Sachs actually did expect, and most people expect, a pretty weak Q1. But have a look at the changes between Q2, Q3, and Q4 of this year. Well, as it turns out, they're expecting some pretty nice gains in the US economy. And you'll notice this chart here is really showing, again, that very similar Q1 kind of slowdown. Again, kind of similar to other periods. Q1's been a bit weak recently. And then hopefully, if you're a bull, Q2, Q3, etc., do actually increase and start to move a little bit hotter. Now, why is that important? Well, it comes back to valuations and whether you can continue to buy the market right now, but it also comes back to where we are in terms of stagflation. Now, if you know anything about stagflation, generally, if you've got the GDP decreasing, you've got increasing inflation, you start to actually get into the stagflation scenario. Now, I don't think we're there yet, but a lot of people, of course, are discussing it and saying, well, we're seeing slowdown, everything's slowing down, and that could be a reason why gold, commodities, and other markets that we love at the moment are doing so well. I tend to believe it is actually that the Federal Reserve and central banks around the world are doing absolutely nothing to combat inflation, and that's leading into, of course, the reflation trade, which is the metals, which is gold, which is everything else. Of course, there are powerful factors going on here around the world. Here's another interesting chart that shows us where we are in terms of our PE ratios, shows us where we are in terms of our 10-year historical averages, and you'll notice that in a lot of ways, some of the areas of the market are starting to get pretty expensive. Now, I'm a big fan of utilities right now. Obviously, energy went pumping over the Friday session, and we have also seen a decent rotation this year into metals and other areas. So what just happened last week? Well, people started to freak out a little bit on the market, and you'll notice that basically throughout May, especially accelerating to the back of May, everyone started to buy put protection. And the put protection levels actually hit the same kind of point that we found in October of last year. Now, often when people are buying put protection, of course, prices go up, they spike, and it can put floors in markets. So for bulls, they'll be liking the fact that they're seeing the rising cost of put protection, because basically it's telling us that maybe the markets are actually going to keep pushing higher. And we'll look at that in a moment. What about sentiment surveys? Well, this is the latest one from Bank of America, and you'll notice that in general, they are sitting completely neutral on their bull-bear indicator. And of course, their bull-bear indicator is basically not at the extreme high, nor is it at the extreme low, with most positioning showing a mixture of neutrality. So why did we mention energy before? Well, of course, OPEC Plus is doing some curbing, and they've continuously done curbing this year, and this is because it is an election year. In my opinion, there is a powerful force behind closed doors trying to get energy up, and one's trying to get energy down. And basically what's happening here is you've got a bit of a fight between the bulls and the bears, or however you want to explain it in terms of the markets. So because these powerful forces are there, it means that energy is a very wild trade, and we have seen this cut, of course, in the past lead into the energy market actually going up. Because, of course, if you're lessening the barrels, you're lessening the amount of supply, and that overall, with consistent demand, which seems to be relatively consistent right now, is leading to higher oil prices. Some other interesting charts I thought I'd put in here just before we get into the dark pool activity. This one here is manufacturing unit labor cost in China. Obviously, has been increasing for a long time. This chart again is just one story. Remember, it looks wild when you look at it. Why would you build in China? Why would you do any manufacturing in China? Well, it has to do with shipping, transportation, efficiencies, all of these other things, not just the cost of labor. So yeah, a lot of these countries though are starting to take over in some of the areas, and you can see why with their cost of labor being well cheaper. But that is only one metric when you look at it overall. Now let's go through the dark pool activity, and I did tell you there was going to be a big one, and this is the first big one here, NVIDIA. Oh, massive trades coming in near the close, and basically it's the second largest trade over the last, I think, like 18 months, and effectively this is huge because it's happening right at that point where we could be seeing an island reversal. We'll take a look at the option in just a moment, but this is certainly one to be watching this week. And from the same sector, we've also got QCOM showing quite a lot of transactions near these highs. So is it semiconductors about to kind of get a sell-off? Well, they had a pretty good May period, and they've obviously rallied up really nicely. It looks like they're maybe looking for a pullback. So let's have a look at rotation of the last week. So first up, 5 days of trade, technology worst, mostly because of AI-style software companies that are getting hit up by all these new companies. I'm sure they're starting to take their bread. And then at the same time, we had solar, which has been an excellent breakout, clean energy, which is coming with solar, and then of course utilities, metals, and home building construction, which has increased, which has been nice. Also, we end up seeing regional banks ended up positive for the week, which again is a positive if you're a bull in markets. As you know, follow the financials, follow the regional banks. If they keep going up, you really shouldn't be too concerned about the markets because they are very sensitive to market conditions. Let's now take a look at the rotation on Friday, which was everything but technology, basically. You can see here semiconductors were down on the market session, technology was flat, and really it was energy, probably anticipation of OPEC+, and then of course utilities coming along with the same reason, and a few defensive positions. Now, if you look at this chart, what you'll notice is that it was down during the morning, it hit our put support and major buy zone, and then right at the end of the close, it rallied big time across so many sectors. So someone really ramped this stock market. So it leads us into saying, well, was the delta positive? Well, as it turns out, if we have a look at an S&P 500 chart, yes, it was. And there were quite a few buyers with a decent amount of daily volume going through at 3.7 billion, which you'll notice is larger than our previous reads for quite a few days. And of course, this, along with the wick, kind of suggests that the bulls have started to take back control of this market with that little pullback that came to our first major bull zone. So should we celebrate? Well, there are two major levels here. And the first one is going to be, of course, a mixture of call resistances, 61.8 fib pullbacks, and everything else. Do I think this technical level could have bears or could have sellers in it? The answer is yes. I think this is where the bears or sellers will basically place their positions if they're going to, somewhere between 52.88 and 5,300. This also makes sense from the previous most traded zone, which we know sits right in this area here. Between 5,300 and 5,310, we have huge amounts of trades that have gone back from before. So effectively, it's the biggest area of the week for sure for markets to push through or get below. If the markets do manage to get to a new high here, I'd say we make a new all-time high, push 5,400 narrative, and it looks like it could be the Russell 2000 that does the most benefiting from this, as we are seeing that rotation. Now, if we do end up seeing a sell, where do I think the bears will come back in? Well, it seems likely, at least through the Monday session, that we'd be getting in around 52.45. And this is a mixture of one-day expected options moves, put support, anchored VWAP. So a lot of stuff sitting on here, plus a little bit of structure, certainly a key level. So huge bull market, then we come back, then maybe we rally back up. This would be kind of the most likely scenario that I'm looking at on the charts. What do you think, though? Let us know in the comments down below. Let's have a look at the options, see if they agree. Well, as we know, 0DTEs are starting to play a bigger game in these markets. So on the 3rd of June, we have a 5,300 call. That is pretty massive. Now, if we get past 5,300, we enter back into positive gamma situation. And obviously that starts to push that narrative of rally, 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 up until maybe 5,400 or the next big major zone. 52.45, you can see here, does end up having the puts on it. And 52.75 is kind of like the battle between the bears and the bulls in terms of options overall. When we look at the 4th, so the next day, you'll notice here that again, we've got a lot of calls struck off. So if the markets do manage to hold up, close through 53, let's say 10 plus or 20-ish, then we're probably moving into a bit of a squeeze situation. So again, every single Wall Street person that's trying to push this market down will probably be trying to do it right around this area. And that's to stop that kind of situation coming through. Again, more of a smattering of puts through the 4th. So the 4th of June is more of a smattering. And now let's have a look at the June OPEX. So basically the 3rd week options expiration. This changed quite a lot, but still huge amounts of calls sitting above. Again, you can see the 5,300 to 5,400 narrative remains the most strong if zero DTEs and price action pushes up. So for now, I would say who's in control right now? The sellers will try to get in control, I would think, throughout the Monday, Tuesday sessions. And if they're unable to do it and the bulls do take back, we're probably moving in a fairly decent squeeze situation. Do the CTAs agree with this? Well, in many ways, not really. They're just kind of neutral. S&P CTAs, Commodity Trade Advisors, completely neutral throughout the last couple of sessions. The NASDAQ ones also neutral, again suggesting that this rally is not as good as previous rallies that we've seen, where CTAs have really positioned strongly into those moves. Again, we always do pay attention to this. It is a huge read underneath. Gold CTAs, they're doing nothing, so overall they are net negative. And Brent CTAs, well, they're up, down, and all around. So basically, oil price versus the CTAs. You can see the CTAs are neutral, and oil price is kind of, I would say, bearish at the moment on price action, but it's probably going to go bullish on the Monday. All right, let's jump over to a couple of other unusual options activities. You guys are loving NVIDIA at the moment. And as we've mentioned before, 1150 is a huge call res, same with 1200. We were in positive gamma. That has now started to switch over. So you can see here that spot price at the end was 1100, closing just underneath some big call levels. And for this week, you'll notice that, again, where do we have those puts? They're sitting all here. So because we're about to cross into negative gamma, if we end up gapping below, that will cause an island reversal on the charts we'll see later, and it could create a cascade selling effect all the way into 1,000 very, very, very quickly. So with that, there'll be something you want to watch this week. For something like Tesla, 170, 175 remain the big put supports. So basically, they're the levels where if the buyers are going to commit 170, 175, you need to see those hot prices hold. And if you get through 180, 185, 190, etc. Just a quick reminder, we do post over on X at the moment our charts updated for the US 500 as we are in volatility. So make sure to follow in the links in the description if you're interested in that. All right, let's jump into the charts, guys. So first up, what are we seeing? The VIX got crushed, and that's a big crush too. I think it's the biggest crush on the VIX in a single day since October of 2023. And you know what that was? That was the beginning of the bull rally. So yeah, a huge crush on the VIX after coming up. It did hit our first bull zone, so certainly a very good buy area, and I'm sure a couple of you are pretty happy with that. Let's take a look at the bonds reads now, and you can see here that the options market for bonds is starting to increase in risk. This is something we've used in the past to show us that there is an inherent level of kind of problem in the market, but it's still a little bit low. It's not like accelerating super fast. It would make me cautious at that 5,300, 5,310 though level, especially if I was a trader, because that zone with this, it does kind of point towards at least the market trying to sell off to 52.45. Let's move over to home builders. Was that good? Yep. I'm going to give that the tick of approval at the moment. It's still holding up. So that means that overall the underlying of the market is quite strong. Yield-wise, we've got yields dropping. That's good for treasuries, of course. And they're still stuck between the zones. So 4.7 and 5 are nothing burger for yields at this point. What about central bank liquidity indicators? Neutralized, so absolutely no problems there. Markets are still looking strong. And a few people said that I was looking at the Trump indicator the other day. No. I meant to put in Dow Jones Transportation Average because this is a very decent read on usually whether the markets are super struggling. And you'll notice that the weekly close after the end of the Friday market action was again towards the bull side. So I think for investors, maybe you probably don't have much to be concerned about. The PMI, sure, we can get rid of that. The core PCE that came out from the Federal Reserve, that they usually look at that one, of course, to do a CPI. That was pretty normal. The only problem there was, of course, retail sales was down a little bit across the board, or at least the American consumer was weak. But in general, DJT did end up holding up. Now let's move over to some of the major kind of currencies and the major commodities, and then we'll get into the indices and the major stocks we're looking at this week. And the US dollar was, I would say, neutral into the close, but again, I've got that tinge of bearishness on it. It's a mixture of seeing yields drop a little bit here, and it's also a mixture of just the price action. So you can see here, most traded level, that's where we expected the bears to recommit. They've managed to hold this wick down here. So this level I would certainly mark out around 104.24. And if the market manages to get underneath that, we should expect the US dollar to weaken and across the board, basically other things to start to go up. Now, I don't mind the fact that it's in this area. What I'm kind of looking at is a coil for a while, and then I would love to see a big break. I do factor in that I'm kind of a little bit biased towards the next 12 to 18 months seeing weak dollar, but we haven't really got the huge sign of that yet. We will update when that happens. What about copper? Well, it got so close. It got down to 4.57. We expect copper to get to around 4.5, and we've talked about this for a little while. So did we expect the weakness? Yes. Many people didn't. We certainly did. Is this still a bull trend? I believe it is still, yes, in a massive bull trend. And in general, this is the pullback that you have to wake up and shake out all of the weak hands. So 450 something we're watching. Now we move over to oil. So this one here, no new low. Maybe it won't get a new low. It'll be interesting to see how this trades through the Monday session with the OPEC Plus news. But XLE was actually up and oil was down. So that's a very strange day overall, but something we're watching, and oil price remains still quite difficult to read at this point. Gold was much easier. The short here was very, very nice. And if you did manage to get into this short, especially with that wick rejection off that little bit of anchored VWAP there and supply, then that was a very nice trade. Now it's come down to this support, of course, closes around here. We're looking for it into this red zone or even down to 2175, 2200. And when you look at things like the daily, of course, it doesn't look very good on the daily. You can see here the rejection. And when you look on the weekly as well, it looks pretty bad. So you know what you're going to be doing as a bull. You're just going to be marking out those highs of the previous week and saying, look, if this thing gets above what was a very bearish looking candle coming into the end, then I'll start to switch my position back to the bull side. But for now, I would say this becomes more likely, getting back down into these lows down here between 2280 and 2300. So yes, I'm big bull long term. Yes, I still think gold can get to $3,000 an ounce, which I've talked about a lot. Yes, I still think silver can do 50, but it's the pullback that we have to have. Too many people too bullish. You've got to shake everyone out, and that's what every time markets do. Speaking of shakeouts, could Nvidia be coming into one? I've got a bit of an alert here for an exhausted market. Also, a possibility of an island reversal. That is a gap up. A few days of sitting around with decent volume, which you can see here. Pretty good volume. And then if we gap down, we start what we call an island reversal. Now, I personally would not short one of the strongest stock in the world. However, some people will. And I noticed a lot of people in the comments with puts all over the place. A few of you using caps lock permanently. But anyway, I do wish you the best, and I hope it works out. So if we get a gap down here, and it ends up doing that, then you will have an island reversal. That along with something like, unusual volumes. Let's have a quick look here at the volumes. We'll see if we can load it here live on the charts. It should be coming through in just a moment. There it is. You can see here that we actually have a lot of negative delta. So what that's telling you is that, yeah, there's probably someone selling into the strength. And of course, retail traders have been very bullish here. Would I be concerned about longer term holding of Nvidia? Probably not. I still think infrastructure, I've told you guys and shown you in the previous charts how it could be like a repeat of the 2000 boom, which obviously was Cisco and Intel, the infrastructure plays back then. But yeah, negative delta, gap close, gap or gap down, that'll bring an island reversal in, exhaustion. It has all those signs of pullback in Nvidia kind of coming through. Tesla, coil. Long leg dojis here. You can see that they are basically sitting exactly where you would expect them to. And yeah, they're right in that zone. The longer it coils, the bigger the explosion when it comes through. Again, 170, 175 is basically the support buying. And we're looking for that 180 plus closure. Notice we haven't been able to do it yet. We just keep making dojis. So Tesla, a very interesting one. Looks like an inverse head and shoulders. There's some strength coming in here. We'll see whether it can hold up. A lot of you in the comments are like, Tesla's going to burn. Yeah, maybe it will. But of course, we're looking at the price action. We leave our opinions about the limited information we generally have at the door, and instead we're looking at what does the price tell us at this point. KRE, I just wanted to put this on the charts to show us that regional banks have been improving or actually showing some signs of like a little bit of recovery, and financials also recovered strongly over the last 3 sessions. So that's kind of showing you rotation, and it's also showing you in the right areas some strength. So again, it strengthens the bull case to say that, really you don't have too much to be worried about yet as an investor. What about the Chinese market? Well, another day of sell-off, and you'll notice it's starting to get exhausted. I think this sell-off is starting to get exhausted, and we didn't see any buyers around 18,200, 300. Now, I've talked about that level for ages. I did think we'd find a buyer here, but we didn't see one. That's why we say patience, react, don't predict. Wait for the market to show you a buyer. It's coming down like a steam engine. This thing's about to run you over and unfortunately do bad things to you. So you don't want to just go and randomly buy it unless you're position-based buying for a long term. So I think it could come back down into here, which is around 17,800-ish. And we love the 8s in China, yeah? So we'll see whether we can get down to that level. But yeah, I think it hasn't shown signs of a turn yet. I'm still bullish on the market overall. US 30 actually didn't come down as much as you would think. The Dow managed to bounce, thanks in part to a lot of those stocks we talked about in the previous video, finding some dead cat bounce kind of levels. Things like CRM, Adobe, and others. What I was looking for here predominantly was I was liking the idea that it would come down, maybe down there, and then I'd look for a buy. But, this is the thing. You always look for it. You have that abundance mindset. And actually, the way it ended up trading through kind of the Friday would suggest that a pullback will be met by bull demand. It's in a DCB, so basically I would be very, careful with it and timing, but it's an interesting one. Solar also improving across the board, something we've been looking at, and that's been a very, very strong sector recently. And the movement into US 2K. So we're not above the high. This will actually confirm, I think, a new bull run on Russell. So that'll be above that 2100, 2090 zone. But still very strong buying here through the Friday session. Managed to hold when it did close it below here and possibly push that 2000 narrative. And yeah, it's been the S&P and actually the NASDAQ that have been weak. So you can see here the NASDAQ was actually the weakest, and it didn't manage to make it above that previous high. So again, for the week ahead, if I was a NASDAQ trader, I'd be very focused on what's going on around 18,610. Do we manage to close above that? Therefore, submitting that this was a very quick sell-off. We ended up getting down to our watch reaction here level and found buyers. My favorite trade, though, on Friday has got to be the US 500. Just hitting that 5,200 level, bam, big buyer. And they went bazooka and went crazy on it. And of course, that's the type of thing you're looking at. Patience paid off last week if you were looking at that key zone, which we discussed. Bitcoin, coil. Yep, it's expected. I like the coil. The longer the coil, the better it is, because when it breaks, it goes ballistic. I am still looking at the upside here on Bitcoin. I'm looking for 72K plus. And of course, we are focused on getting it there. So I'd like to see the market coil for a while, break out, and then show some real strength. It does look like we're going into possibly an alt season as well, so we'll update that on the channel very, very soon. As always, guys, it's about news this week. There is PMI. We have JOLTS job openings. We have non-farm payrolls. We have a bunch of Euro news, a bunch of news around the world. So you've got to be on top of all of that. Thanks so much for watching. If you enjoyed today's content, then remember to subscribe and smash that like button. And of course, follow us over on some of our other socials as well. I highly suggest coming and checking us out on X. If you're interested in finding out more about how we get edge on markets, the cycles, the really in-depth cycles on cycles, which is super exciting stuff, that's in things like our advanced masterclass. And if you want to check out those courses, you can in the links down below. Thanks so much, guys. Have a great weekend. Bye for now.